I'm Douglas Mason, CEO of Naturally Splendid, symbol NSP on the TSX Venture Exchange. Naturally Splendid is a biotechnology and consumer products company focused on the global cannabis and health markets. Naturally Splendid is expanding distribution in this rapidly growing market with products currently in Canada, the USA, South Korea, Germany, and Australia. To view our comprehensive company presentation and for more information, please visit our website at naturallysplendid.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Lobo Tiggre from the IndependentSpeculator.com. He's speaking to us from Puerto Rico. Welcome back to the show, Lobo.
Glad to be back on, Jim.
Things have changed since we chatted last. What was most notable for you?
It's been a busy month for me, and I think for a lot of investors out there, speculators, of course, independent or otherwise. The big news, of course, was the Federal Reserve's apparent about-face. It's interesting in several ways to me. One is it is an apparent about-face, and the much more dovish-sounding language has, the priests of the mighty oracle of the Fed poring over every word, every nuance. The word patient was used 5 or 6 times in Jerome Powell's news conference, and the markets loved that. That was just what they wanted to hear. It was off to the races again after that. But of course, they didn't actually change any policy. They weren't expected to do anything with interest rates there. Powell continues to say he's going to be data dependent. He'll be patient, but he's still data dependent. So they haven't actually changed anything. But the markets are now pricing in 0 rate changes and possibly even a rate decrease this year, which strikes me as a bit of putting the cart before the horse. But whether it's right or wrong, it tells us a lot, I think. It tells us how nervous the market is and how vital, at least the appearance of life support is. And so it was interesting to see gold react strongly to that. I think we've also seen more days where gold and the dollar goes up at the same time this year than we did last year by this time. So interesting things going on. The apparent dovishness of the Fed, if it bears out, is very bullish for gold. And we saw that already. If it doesn't bear out, then I think markets go back into panic mode and you get the fear trade back on, which is, again, bullish for gold. So I'm sure that, our gold and silver bug friends out there will be very happy to hear me say that I'm actually more bullish on precious metals this year than I was last year. And to clarify, and I'm making this a very long answer, but to clarify, as Doug Casey taught me, I'm not talking about the metals themselves. Gold is where I put my savings. It is, physical wealth. That's one thing. But to speculate on the prices is another matter. And I'm not always, a cheerleader waving the gold banner and saying, yes, this is the year gold's going to go crazy. Last year I was quite a bit more tempered. So the change has prompted a shift in my own view. And I am more bullish on the precious metals breaking out this year than I have been really for quite some time.
We've seen some major mergers in the gold sector, and I see some other gold companies are talking about getting together. Why is that happening?
Well, we could say many different things, Jim, and each company will have its own reasons and their rationale. But I think the answer that people in our space want to hear, and I think there's some truth to this. I'm just hedging it because, when you say why, not God, and I can't tell you, here's the answer mathematically or existentially shown. But our take is that, you cut your exploration expenses when the markets are down. You don't discover new resources. And mining is a self-depleting business. It's not like, making power out of a river that runs by all the time, or even making shoes where you can grow more cows and make more plastic to make your shoes. A mine is a self-depleting asset. You have to discover more gold, silver, copper, whatever it is, or it gets smaller until it ceases to exist as a mine, as an economic mine anyway. So the mining companies have cut back on exploration, which is not stupid. If, prices are down, costs are up, you got to cut somewhere. And if the market is demanding less, maybe it even makes sense from a longer-term perspective to cut back on the exploration. But if you do that, you're not replacing what you produce. You become a smaller company, and that motivates a lot of these mergers. And so, we see this latest one with Barrick and Newmont and Goldcorp. And that really just kind of puts Newmont back to where it was a few years ago. The total output that they gained from Goldcorp really isn't that huge. It's not a merger of equals. It's a larger company buying a smaller one. As big as Goldcorp is, it doesn't, it sort of just barely puts Barrick across the top line. So now it's the biggest gold company in the world. So I think we see perhaps more of this, though there aren't that many at the top level. I think we see the companies reaching further down the food chain. I think this is very good news for the smaller companies that actually have something that's a takeover target. So, good news there, because takeover bids often produce instant gains, like overnight gains on a substantial level, double digits, rarely triple digits, but very, very substantial gains on a short order. I think it's a little more complicated than that, though. The other aspect, though, is as these bigger companies merge and consolidate their portfolios, there's always going to be a rationalization process. We end up with 5 projects in this country and only 1 in that country. Well, maybe it makes sense to shut that one down, sell it to somebody else and cut our overhead for countries and concentrate on the country where we have more mines in operation. Exploration JVs with juniors and so on. You can see where the bigger companies will decide, we're going to stick with the best in our portfolio and get rid of the rest. So you can see a lot of juniors getting JV projects back from majors. If the majors just kind of poked at it, didn't really discover much, that's probably bad news for the junior. It's going to be hard to replace that. But if the majors did a lot of work and added real value, but it just doesn't quite fit what the new mega major wants, you could actually see a substantial benefit accrue to the junior, where millions of dollars was spent adding value, and now they own it 100%. So one size doesn't fit all there, but those are the things I'm looking for in this regard.
We'll have more with Lobo Tiggre right after this.
I'm Greg Johnston, CEO of Carl Data Solutions, an industrial Internet of Things company that provides big data solutions for monitoring critical infrastructure. Carl Data offers machine learning and predictive analytics features through our cloud-based applications to deliver key asset-saving operational insights from massive amounts of data. Carl Data trades on the CSE, symbol CRL, and the pink symbol CDTAF. For more details on Carl Data, please visit carlsolutions.com.
Media recognition from Bloomberg, Reuters, Recycling Trade Publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Welcome back. We're speaking with Lobo Tiggre. Lobo, are you expecting more action in the oil patch, or are prices high enough to encourage that?
I have been a quasi-bear, actually, on the oil patch for more than a year. I just don't see a sustainable push for higher prices. Yes, they could, vacillate a bit higher. They could easily go lower. I think the price is certainly high enough to incent the U.S. Producers to continue pumping all they can. And we mustn't forget that the restraint on the part of OPEC Plus, it's not structural. It's not that they don't have the oil and gas. It's a voluntary restraint. So even things like Venezuela going off the deep end, everybody knew that was coming. That's, I think, factored in. It's understood. It's actually, Venezuela is potentially a tailwind, a benefit for Canadian heavier oil. But overall, in terms of gas prices and oil, energy prices, I think the market is perhaps reaching as an Austrian influenced economic observer, I'm resistant to calling it an equilibrium, but it looks like the market has kind of felt its way to a fairly stable place here, where if there's cuts in one area, then more supply can be brought on in another area. It's, so I'm not looking for any huge increases or decreases in the near term, in the next few quarters. And as a speculator, that makes me out. I'm not looking for a safe, steady investment in the oil patch. I'm looking for a hockey stick. And that could be generated by a big up or a big down if I felt sure which way it was going. And I don't see that right now. So I'm basically sitting this out.
What about sustainable energy? Are there investments in that?
Well, we certainly see that. I call this a paradigm shift. It's a mega trend that is in motion. It was, unfortunately, I think, started by governments passing laws, passing incentives, even banning fossil fuels in certain areas and so on. But more and more, that's visibly becoming less necessary. People want the new electric cars. They're seen as good products, better products. It's not just not having to fill up your Tesla or whatever with gas all the time. The number of moving parts in an electric car is so much less than in an internal combustion engine car. The repair and maintenance is vastly less. So that's just one example. There's a lot of factors in this, but I see that paradigm shift as A, one way, and B, gathering steam, and one that will last decades. So whether there's another big headline of Norway having, record-breaking electric vehicle sales again, or something like that, it's drops in the bucket at this point, or maybe drops in a flow that just keeps going and growing. If there was a major setback of some kind, that could certainly roil the market for a while, but I don't think it would change. The number one thing that people keep looking for is for Tesla to somehow fall flat on its face. And I keep telling people, that could maybe provide some shock value and hurt something around the edges temporarily. But it is so much bigger than Tesla now. There are half a dozen Chinese versions of Tesla coming online as we speak, right? Over the next year or two. We're not talking eventually or someday. I mean, this stuff is happening now. And you get a cheaper Chinese car that does 80% of what a Tesla can do, and that thing will take off in a big way. So yes, I see steady progress there, and I see that as being very bullish, apart from short-term volatility in the related commodities. Overall, long-term, very bullish. And by the way, going back to the previous question on the oil patch, at some point, this becomes a big problem for oil. I mean, the growth of world population, the increasing wealth in the Asian Rim and so on, I don't think the auto industry, or the internal combustion auto industry as we knew it just goes away overnight. It shifts to electric. It takes a while. And I also don't think ExxonMobil or any of these big oil companies, they don't just go away overnight, but they do evolve. I wouldn't bet on the new energy paradigm, meaning that we should short Exxon and get out of Exxon. But I would look to Exxon becoming a more diversified energy company and broadening its portfolio.
Well, I saw Shell, I think a few years ago, spent $250 million buying one of the largest wind farms in Europe. So they're diversifying their portfolio. Right.
And it goes across the board. There was somebody, it might have been BP, I don't remember which company it was, but there was a major player that was just from outside the U.S. buying into U.S. shale oil too. That's not the new energy, but it shows that people aren't just thinking, okay, here I am, this is what I do, and that's all I'll ever do. All the players can see what's coming. This paradigm is absolutely written in 10-foot tall letters on the wall. Everybody sees it, and all the major players are getting ready for it.
We'll have more with Lobo Tiggre right after this.
Cypress Development Corp's flagship lithium project is located just east of Albemarle's Silver Peak mine in the heart of Clayton Valley, Nevada. A 12-hole exploration drill program for lithium-enriched claystone on Cypress's 100% controlled properties is now underway. Cypress Development Corp trades on the TSX Venture Exchange, symbol CYP, the Pink's CYDVF, and on Frankfurt's C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Lobo Tiggre. Going back to the change from oil-powered cars to electric, that's really going to change a lot of the service industry right now. We have all those oil change places along the road.
Right. No more Jiffy Lube.
No more Jiffy Lube, or very few. There'll still be some, gasoline-powered vehicles. But, and also mechanics. You don't have to tune up an electric car. You get your batteries changed once, or not changed, but checked once a year. And the only fluids you have to replace are for your windshield wiper.
Well, I mean, Jiffy Lube will fix your air conditioner too.
And change tires.
That can go wrong with your electric car, so let's not over-exaggerate it, as kids say. But that having been said, if you accept the notion that these new electric cars, it's not really comparable apples to apples with other cars. It's not just an electric car. It's really a computer on wheels. It's an information system coupled with a transportation system, right? Where, eventually you may not even be driving the thing. You may be just watching movies or working on your keyboard there in your vehicle, or a vehicle that may not even be yours, right? Shared use economy, right? The big questions are, will people even bother buying cars anymore? If something like Uber is everywhere, or if Tesla does its own Uber and General Motors has rideshare for all its cars, then it completely changes. Instead of selling you a car, they try to capture as much of the rideshare market as they can. And instead of everybody having cars that are parked most of the time, the cars are in use most of the time. How many cars do we need under that scenario? So big changes where service and support, there'll always be something that goes wrong and needs fixing.
Sure. And
then it might be that your Jiffy Lube guy is more like a teenage hacker in the future than an old grease monkey.
Well, also too, we won't need all these parking spaces downtown, and those buildings can be redeveloped.
Yes. And we talk about dense urban areas that are lacking in green spaces. You could, demolish some of those parking decks and put a park in instead. Make a vertical park even. You could put a vertical farm in there. And, lots of interesting things coming as a consequence. We could get very science fiction-y about all this. But at the very least, we see pollution going way down. And that's a good thing. I'm not a hardcore environmental activist, but sure, I want to be able to breathe clean air. And, when I go for a hike with my children in the mountains, I want the trees to be green and the snow to be white.
Yes, and Vancouver's got lots of snow for once. We get winter for a couple of weeks a year. And I think that's all the people here could stand, frankly. It snow's handy when it's on the ski hills, but not down here where so much of our population has never seen snow before in their life.
Absolutely. I love living in the Pacific Northwest. It seems like the snow is just very polite, right? You could look at it adorning the mountaintops. You didn't have to drive in it most of the time.
Yeah. Like I said, it's for skiing. It's not for driving. China and the U.S. are continuing their trade talks. Are you expecting them to be successful or semi-successful?
Well, that's another interesting one. And let's pull back and say whether I can call that correctly or not. It's very important that it's happening and it has such a powerful effect. You see every time there's even remotely good news from the trade talks, Wall Street goes up, all three major indices are in the green, everybody's happy, happy, joy, joy. And then somebody tweets something, oh, we're miles apart, or oh, maybe this will take longer than we thought, or and boom, the markets all come crashing down again. It shows how important this is. So fix that in your head. This is not just a sideshow, and by the way, it's not just Wall Street. This is very important for commodities. China, of course, is the number one consumer of raw materials in the world. And so China's going up or down as a result of the trade war. That has major consequences for commodities prices. And the Chinese themselves, being people who also see gold not just as some barbarous relic, but as wealth and as a form of savings. Their wealth and capacity to save has a very powerful and direct impact on the price of gold. So this is a very important issue. So no crystal ball, but my take is just sort of looking at the situation as rationally as I can. It seems evident that both sides really, really want a solution. Both sides absolutely need to maintain faith, as they would say on the other side, and both sides need something they can call a win. So that may be difficult to engineer. I wouldn't get my hopes up for any huge success right away, but I think both sides are highly motivated to bring this to at least the appearance of a positive conclusion as soon as possible. So as far apart as they are, I would expect both sides to come up with some announcement before the March 1st deadline, when the ceasefire ends, of at least, we're making substantial progress, or we're very hopeful now, or something, or maybe an extension of it. We've made enough progress that while we don't have a deal, we are extending the deadline 3 more months or something. I think both sides understand that they have a lot of stakeholders that want something positive to come from this. So my guess is, and it's just a guess, is that we'll see some kind of, if not solution, a positive enough sounding news before March 1 that we'll get a tailwind here, both for industrial minerals and precious metals. Whatever that's worth, that's my guess.
Lobo, thank you so much for chatting with us.
Always a pleasure, Jim.
My guest has been Lobo Tiggre from the IndependentSpeculator.com. He was speaking to us from Puerto Rico. You're listening to HowStreet.com radio. Find us on Twitter at HowStreet. Our YouTube channel is Talk Digital Network. If you have questions for Lobo or any of our other guests, you can send them to info@HowStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.